Paul Katie, thanks very much indeed for joining us.
Give the government some confidence. Think about the economy more broadly going well for China. The more interesting story is you look at TSMC.
Hi, welcome to the East Asia Econ YouTube channel. I'm Paul Cavey, the founder of East Asia Econ. Today, I want to talk about inflationary risks in the economies and talk about two things which I think are underappreciated. So energy matters, but that's not really going to be my focus today. And I'm going to talk about other things which I think maybe the market's missing and are actually quite significant. Now, before I get into that, I wanted to make 3 requests of people watching this video. The first thing is, if you like this video, then please say you like it and also subscribe to the channel. I do need some more subscribers, so this would be very useful to me. So I would appreciate you doing that. The second thing is, check out our website, eastasiaecon.com. On that, you'll find a wealth of analysis, data, and visualizations that help you understand everything you need to know about macro markets in the region. There's really a ton of data behind it, and I think it should be a useful resource to people. The third thing is, if you find any of this interesting and useful, then please do think about becoming a paid subscriber. This is something I'm doing for a living, and so obviously it would help me a lot. We have a services for individual subscribers, and you can find details of that on the website. And we also have a more comprehensive offering for financial institutions. And if you are in a financial institution, you think this analysis is useful, then please get in touch with me directly at paul@eastasiaecon.com. So that's all in terms of the way advertisement. Now, what I want to talk about today is what's happening with inflation in the region. And as I said, the focus is really to think about the things which are underappreciated. So the obvious thing is that energy prices are going up. And so the region is an important, big importer of energy from the rest of the world. And therefore, this is something that's going to matter. Fine, right? That's obviously important. And I'll talk about that a little bit. But the two things I wanted to focus on are a bit different to that. So the first is the semiconductor side. And the semiconductor side is obviously, everyone knows it's important for growth in the region. It's important for exports. It's important for external surpluses. But I'm going to make the argument actually it also matters a lot for inflation. And it matters for inflation in the rest of the world, but it actually also matters for inflation in the economies themselves. And the second thing is to think about currencies. And, I talked about this endlessly, really. Currencies are very weak. They should be appreciating. But as long as they don't appreciate, then there's also an added impetus coming to inflation, because the currencies remain very weak relative to the sort of growth that's been seen in terms of exports and semiconductors and everything else. And if that's right, then that has implications for markets, because it implies that central banks are going to be having to hike more than a lot of people currently assume. And obviously that matters for bond yields, and maybe eventually it is something that will start to matter for currencies. So that's what I'm going to talk about today. So the first thing is thinking about energy, a mention of what's happening on the energy side. And so as we've talked about in previous videos, we know that East Asia is heavily dependent on imports of energy from the Middle East in particular. Energy dependency in Japan, Korea, and Taiwan is sort of 80-90% of total energy needs. And so it's significant in that sense. For China, it's less because of the electrification that's been going on, and also the greater importance of coal in China's economy. But for the rest of the region, this import dependency is high. Now, that's true. We also know that energy prices are going up a lot. Now, there is policies from the governments across the region to try to prevent the full impact of the rise in global energy prices hitting consumers. And we can see in somewhere like Japan, where that's something that's reducing actual CPI by about 1 percentage point. But this is something that actually costs the government a lot of money. And actually the fuel subsidies in Japan right now are much bigger than they ever have been before, and are costing the government about 1% of GDP in terms of an increase in the budget deficit. And so this is something which, is unsustainable, particularly if the Takaichi government wants to spend money on things like boosting investment and the other priorities it's outlined. So this kind of energy impact in terms of the direct hit to CPI, it's been limited so far, but it is something that's likely to increase as over the course of time, the subsidies the governments have been using so far begin to run out of sustainability. The second thing in terms of thinking about the energy impact is not going to be limited to the sort of things that governments can control. So they can look at what's happening with energy. The oil price goes up, that affects the pump price. Governments control that. But obviously, we know that energy prices are an input across the manufacturing chain. It's not just in terms of specifically energy for consumers is the only place it shows up. And we can see that in somewhere like China. And this chart shows that in terms of the high frequency data we're seeing from China, chemicals prices are increasing as quickly as energy prices. And this is, again, going to be something that's not just seen today. It's going to be playing out across the supply chains over the course of the next few months or so. And so as much as, prices won't increase as much as they otherwise would do because of the fuel subsidies that are being used, it's nonetheless, we're going to see an increase in inflation across the economies as we go forward from here. So this Middle East crisis, clearly it matters. It matters for the region. It matters for the world. That's all fine. Bad, but something that's sort of readily appreciated in the markets already. So the two things I wanted to focus on rather than that is to say that, or in addition to that, so to say that there definitely is a negative supply side shock that's hitting the region that's going to push up inflation. It's also true that there's a positive demand side shock that's hitting the region that's also going to push up in inflation. And that's because of the incredible stuff that's happening with semiconductors. And again, we've talked about this in other videos. It's a big theme for the markets. It's a big theme for the region. So export growth is up, 50%. Export prices are up 100%, 150%. Like all of this stuff because of semiconductors. It's a very big deal in terms of economies like Taiwan and Korea, where the chip industry is such a big part of the overall economy. So it matters for growth. But it also matters for inflation. And again, the reason for that, there's two reasons, in fact. One is a similar cost push argument, which is the same as on the energy side. And that is that semiconductors are a key input in lots of different products across the supply chain. And so pretty much every electronics product you buy has a semiconductor in it. Therefore, as semiconductor prices rise, and as this chart shows, semiconductor prices have been rising a lot. As that happens, it's going to push up prices across the supply chain. And actually, this has already been seen in Asia specifically. So if we look at, and the Bank of Korea started talking about this in its monetary policy reports back in February, that because of the increase in semiconductor prices, it's actually an inflationary risk for Korea itself. And we can see that in the CPI data that Korea is now producing, which show that the price of computers is rising by about 15% year on year, which is the highest increase that's ever been seen on record. And if we look at Taiwan, the data is not quite as high. And I think that's partly because there's less exchange rate depreciation in Taiwan. But in Taiwan also, relative to history, prices of computers for consumers are now rising more quickly than ever. And this is only at the beginning of this process, right? Like semiconductor prices have risen much more than 15%. It looks highly likely that computer prices are going to rise further from here. Well, that's important for the region. The same thing is going to be true in the rest of the world. The reason for that is because of this chart, right? Like this is looking at export prices for machinery and electronics equipment coming from Taiwan and Korea. So a bit like CPI domestically, these are increasing at record high rates. This kind of inflation in export prices from the world's biggest producer of electronics has never been seen before over the course of the last 25 years or so. So again, this isn't just an inflationary hit for Asia, it's also an inflationary hit for the rest of the world. And if we look at something like PPI for computer manufacturing in the US, that's also being seen in an increase there. So it's already beginning to be seen in the supply chain. And so it is something which I think is a macro issue, not just for Asia, but also for the rest of the world. So that's the direct hit. So that's the corollary with the energy side, which this is a cost push phenomenon. There's less supply of semiconductors relative to demand, and therefore prices everywhere go up. But I think there's also something else to consider in terms of the inflationary impact in Asia, and that comes from the demand side. Now, we talked about this in more detail in another video, so you can go and look at a more detailed explanation there. But to put it simply, when we think about economies, there's different ways of measuring economic growth. So one is to think about output. So that's gross domestic product, how much output an economy is able to produce. And so as export volumes in semiconductors go up, that's something that's something that increases output in the economy, so GDP rises. And we're seeing that a bit, right? Like, so in Korea, real GDP in the first quarter of this year was up 3.5% year on year. Sort of impressive relative to recent years, not very impressive in sort of an absolute sense. But what also is happening because of the increase in semiconductor prices is that there's a big positive terms of trade shock for the region, right? Like, because energy prices are rising, you would think there's a negative terms of trade shock, that import prices rise more. But because of exports of semiconductor, the prices there are rising so quickly as well. Actually, what Asia is seeing is a positive terms of trade shock. And how that's reflected in incomes is, the economists think about this terms of trade effect, that the terms of trade is the difference between export and import prices, and it's how much purchasing power the products of a particular economy has relative to the rest of the world. And so how that feeds into the national account statistics is a measure called how that feeds into national account statistics is a measure called gross domestic income. And if we think about Korea again, gross domestic income is now rising by 12.5% year on year. In per capita terms, it's the strongest growth that's been seen in Korea since the 1980s. This is precisely because of what's happening with semiconductors. So I think on the basis of that, it's reasonable to think that in addition to cost push to inflation that's seeing as the input cost of semiconductors goes up, it's also reasonable to thinking that these economies are going to be seeing demand pull inflation, because actually this is a tailwind to consumption. And so as much as people worry about the K-shaped economy and so on, and that domestic economy is much weaker than the export sector, and that's all fine, it's reasonable, it's true, nonetheless, there's still going to be a tailwind for consumption that wouldn't have been seen otherwise, because of what's happened with this huge increase in semiconductor prices. So we have to think about inflation from at least three perspectives now. Not only what's happening with energy prices, not only what's happening with semiconductor prices themselves, but also the income implications in terms of spending in these economies because of the increase in semiconductor prices and earnings that then results for these domestic economies. So that's the thing about the energy stuff, thinking about semiconductors. The third thing in terms of thinking about inflation broadly in the economies is then to think about exchange rates. And this, I think, is also a critical issue, and again relates to the semiconductor cycle. So if you were sort of a Martian, or sort of a traditional economist, maybe, in fact, like, and you look at what's happening in these economies, you have like a sort of a positive demand side shock, resulting in much stronger GDP growth, much stronger export growth, export prices rising, and much bigger current account and trade surpluses as a result. In that sort of scenario, if you were traditionally minded, let's say, you would think that this is something that should be boosting currencies. And boosting currencies would make a lot of sense, because as these economies grow and as there is this positive income, you sort of need some appreciation of the currency to kind of tighten monetary policy domestically and prevent the economy sort of really getting out of hand. Now, we're not seeing that. And if you look at Korea in particular, the Korean won is as weak as it basically ever has been in history against the dollar. Like, pretty much as weak as it was, getting back to the financial crisis back in 2008. Now, the interesting thing about this is, if you think about Korea's economy in particular, like historically, Korea has never had a current account surplus, really, like on a sustainable basis. It's already kind of always oscillates between current account surpluses and current account deficits. If you think about Korea on the outbreak of the Ukraine war, like, Korea was very quickly pushed into a trade deficit because the external surplus wasn't very big. Korea right now has a current account surplus of 15% of GDP or thereabouts. Like, it's not going to be pushed into trade deficit because of what's happening with Iran. Instead, it's being pushed into a very big trade surplus because of the semiconductor side. So essentially, all of this should mean that the currency should be appreciating, and instead, it's basically as weak as it ever has been. So what's the reason for this? Like, why isn't the currency reacting? And there's a bunch of sort of flow arguments or flow phenomenon which explain it. So until the end of last year, domestic retail investors in Korea were taking a lot of money and investing it overseas in US equity. So there's this big outflow of household money that weighed on the currency. You come into this year and you're seeing a big outflow of foreign investor money from Korea. And I think the reason for this is a sort of a portfolio rebalancing phenomenon. But because the domestic equity market has gone up so much, it means that it takes increases the value of the holdings of Korean equities that foreigners have, and sort of means that their weighting starts to go up, and they have to rebalance that relative to the rest of the world. And so there's this outflow because of that. So there's these sort of like flow arguments which are important, and they explain what's happening with the currency. But the other thing I think that's going on is that with the yen and the weakness of the yen is a big problem for currencies of the rest of the region. And the BOK has talked about this in one of its recent reports. And basically, it shows this chart, which looks at the relationship between, the won, the yen, the Taiwanese dollar, and the CNY. Whereas previously, the CNY looked like it was an anchor for the currency. It doesn't look an anchor for the region. It doesn't look like that anymore. Instead, it all looks about the yen. And the explanation for the BOK from this is that it's really because of export similarity. And in particular, if you look at export, like the overlap between the sort of exports that Korea produces and the sort of exports that Japan produces, that overlap in terms of things that are being sold to the US is the greatest between Japan and Korea than it is between the other economies. And as a result, the weakness of the yen is something that then weighs on the won, because the markets would worry about the competitiveness of Korea if the won appreciated too much. So there is these sort of arguments that you can make. And I don't really want to dismiss them entirely, but I do think it doesn't make a lot of sense. What we're seeing right now is, again, if you think about the difference between Japan's economy and Korea's economy, there is a semiconductor cycle in Japan too. It is something which is helping offset some of the sluggishness in auto sales. It means that there is some sort of growth happening in the economy. It also something that can be seen in the stock market in Japan, where some of the leading companies, again, right now are all into like semiconductors and AI and so on. So it's not that it's not a phenomenon in Japan, but there's a huge difference in the economies, right? There's a clear acceleration in growth in Korea this year. There's a clear increase in the current account surplus and the trade surplus. In Japan, it does look likely that there will be a trade deficit this year because of the increase in oil prices. It's just not in the same league in terms of the impact of semiconductors as in Korea. And yet, the argument is that the yen is something that really matters for the won. So I'm not particularly persuaded by the argument. That said, it is what it is. We can see in the markets that seems to be a correlation between the valuation of the yen and the valuation of the won. And so what we now do think about is, if that's the case, what's the implications of that? And again, I think, to my mind, that gets back to inflation. That in a way, what we have in Korea is an economy where the economy would suggest the currency should be strengthening, but it's not. The currency should be strengthening because the economy is doing reasonably well from a macro perspective. That would imply that if the currency doesn't appreciate, I would think that you start to see greater inflationary pressure in Korea's economy as a result. And so this is the third thing that we should be thinking about in terms of the inflationary risks for the region and the inflationary risks for the smaller economies of Taiwan and Korea in particular. One is their dependency on energy. The second is the direct and indirect implications for inflation coming from semiconductors. The third is the implication of inflation coming because these economies really should have currencies that are stronger than they are, and that isn't something that's happening. I think that means that you end up with import prices being higher and inflation being higher as a result. So what does this mean? What's the kind of the market implications of this? I think that it means that, for one thing, if we think about macro, the inflationary risks are really skewed to the upside still. Particularly in these economies where the semiconductor cycle is strong because growth is fine, and at the same time they have all of these other risks that push up inflation. The second thing is that probably the energy subsidies are a delayed CPI shock, but they're one that is delayed and it can't be avoided forever. And I think if we think about semiconductors, it adds a cost push dimension as well as demand side that's happening. And the yen side is something that pushes inflation up even further. So I think the implications of this is that as long as the currencies remain weak, it puts a lot more pressure on interest rates, right? If the currencies aren't going to do any of the work here, then the work instead has to be done by interest rates. And that's either yields rising or central banks looking at inflation profiles and having to increase interest rates more quickly. And I think for the time being, as long as currencies remain weak, I think it looks much more likely that interest rates are going to have to go up more as a result of the weakness of the currencies that are there. So, again, today what I've talked about is what's happening with inflation in the region. These three things I think that people should be focusing on. The obvious one everyone is in energy already. The second thing is semiconductors. The third thing is the weakness of the currencies, with the implications being interest rates over what's happening with exchange rates. If you found this interesting, again, please subscribe to the video. Please check out our website. And if you have any questions, then please get in touch with me directly. Thanks very much for watching.